good evening, traders from across the globe, and welcome to the 929th edition of Short-Term Trading Live with Oscar Carboni, and that would be me. Traders, the 928 other videos like this are geared for trading markets, for you to learn technical analysis and to how to apply that analysis going forward. That's why we do these nightly videos, to get you prepared for trading the next day. This video is being filmed on Wednesday night for trading Thursday. That would be October 11, 2012. Traders, there's a lot on the board that we will discuss, and there's several charts that we need to look at this evening. First of all, what you need to see, another red omni on the board to start the day off with. Another red omni on the board to start the day off with. I can't say I love these red omnis, but hey, at least there are opportunities to trade. It's better than no omni at all, right? So we have a red omni, at least at the onset of trading, in the emini S&P and the Nasdaq for trading on Thursday. On the board, it says do not fall in love with the downside. Traders, I want you to understand that. I want you to recognize that futures trading is extremely risky, can cause you substantial financial loss. So you may not fall in love with the downside, but you will put your stops in just in case the downside is all we get. Make sure your stops are in. This is a very dangerous, risky game. If you do not understand the risks behind trading, you should not be a futures trader. You need to have risk capital to play this game. Traders, remember, always place your stops first. A stop can very well be your best friend in this business. Always have stops in. All right, so on the board for trading on October 11th, I am here to tell you right now two things. One, do not fall in love with the downside in the emini S&P and the Nasdaq. Yes, we think it's going to go down, but for a very short period of time. So, do not fall in love with the downside. The second thing about the emini S&P is it is still showing signs of a little bit more pullback, and it looks like it wants to move lower again, at least for the first half of trading Thursday. So we're starting off this day, red omni, looking for ES and Nasdaq to move lower, but I do not think we're going to stay short all day. I think we're going to be nimble and quick, get out of our shorts and sidestep this, because once again, do not fall in love with the downside. I assure you, after the chart segment, you'll understand why you need to at least be careful here and see what's going to happen next. So, watch out for the downside, or at least I should say, when you get short, make sure you get out pretty quickly. The emini S&P, although it wants to move lower, I will show you why we think it should stabilize very shortly. What else is on the board? We have an Australian-Canadian trade that we got into. Traders, the Australian-Canadian trade so far is doing really, really well. We bought the Australian dollar versus selling the Canadian dollar. It's not a short-term trade. We've been holding this for a few days now. But bravo to you traders that took that trade on, because it is trading at positive 50 right now, if not higher. And we got into that trade at two spots, at par and at negative 80. So far it is doing great for us. Thank you so much for you traders that participated. Now, traders, I want to show you why you shouldn't fall in love with the downside. I want to show you that even though I don't want you in love with the downside, you still need to probably get short tonight into tomorrow, Thursday, at least for half the day. And I will show you how the Aussie-Canadian spread looks. With no further ado, let's go look at some charts. Okay, traders, let me just show you a couple of charts of things that we already have in the works, and then we'll look at the work for tonight for Thursday's trading. Here is an Apple chart. Traders, if you remember just a few days ago, I brought this Apple chart to you and said, look, shoulder, head, shoulder. Apple was right here. I gave you a projection that we would break down. I even drew the line that we'd break down to. Traders, look what Apple did. It went right to the line. I mean, really? Congratulations, and boy, oh boy, a round of applause for technical analysis. What a call, and that was pure technical analysis. No voodoo going on here, traders. You get a head and shoulders, very easy measurement to figure out where it would go. It went right to that measured move. So let's continue. One more chart. This involves a trade that we already have on. Traders, the Australian-Canadian spread. It's the Australian dollar long versus short the Canadian dollar. I've been waiting for quite some time for it to get down to this level. It finally did, like it did the last time it was at this level. Look at the big move it made. We got long right here and right here, traders. Look where it is as we speak, all the way up here. Omni bought the low tick and it rallied straight up, or at least Omni recommended that you buy the low tick. What you did with that information is up to you. But Omni recommended you get long here, and it went straight up to here so far. We love the Australian-Canadian spread. Thinks it looks fantastic. If you are long that spread, please hold it until I send you another flash update. All right, traders, let's now advance to what we're going to look at for tomorrow's trading. Are you ready? A double top. Here is the very same chart I put before your eyes a couple of nights ago. This was dated 10/8/12. And I said, look, traders, a double top. When we see a double top, we sell a double top. Here's what it looked like. Here is what happened. This is a live chart right up to the minute. Traders, look at what happened. In fact, look at this comparison. Unbelievable. The chart on the left was where it was. And look at what happened in the end. It broke down really well. Another round of applause for technical analysis. When we see a double top, we sell a double top. Now look at your Nasdaq. Another reason to think, okay, we will go down on Wednesday into Thursday. That's what this video is for. But maybe at some point during Thursday, we will find support. Why? You can see that we're bearish once again. The Nasdaq, a new channel is born, traders. Look at the Nasdaq just bouncing off the high and low of this channel lately, left and right, bouncing, bouncing, and it's just about ready to hit the high this evening. Then we expect it to move lower. So a channel is bearish, especially a downward pointing channel in the Nasdaq. You just seen the double top in the S&P. That would be bearish as well. Then we go across the pond to Europe and we look at Germany. A bear flag, a breakdown from the bear flag. This is also bearish. So by no means do we want you to be long for Wednesday night through Thursday. We want you to look at the short side. However, we just want to give the short side a little kiss on the cheek and send it home in the morning. Do you know why? We're not going to fall in love with the downside, and here's why. Here is a chart I've shown you in many, many other videos. You've been following this chart for quite some time. It's the Dow Jones Industrial Daily Bar. And I've shown you that it had a head and shoulders with a failed head test. We pointed out that now that the head test failed, we had a projection down to here. If you note, this was our projection. The market got right to here. That's a pretty darn good projection. What happened after the head and shoulders? We started this parallel channel that you see in yellow. But here's why we do not want you to fall in love with the downside. This channel, we've hit the bottom and top, top, bottom, top, bottom, just about hit the top, just about hit the bottom, hit the top. We are right here, right now. The bottom of the channel is right here, traders. We are very close. It looks like one more down day, and then boom, do not fall in love with the downside. The first piece of evidence to think that maybe Oscar's onto something here. Yes, it's bearish, but boy, we should be careful because that's a really long and solid support line. So don't fall in love with the downside, reason one. Reason number two, the bonds, traders, they are pushing towards resistance right now. We're not sure what bonds are going to do right here. At this point in time, they're in a bear flag. If the bear flag is right and we stop at this resistance up here, bonds will go down and propel the S&P up. This is another reason why we are telling you do not fall in love with the downside. Yes, we're starting off Thursday as a short, but we recognize between bonds and the Dow Jones Industrial Average, there is good cause and good reason to be cautious and think that once we go short, we take profits and sidestep the market. Traders, I hope you are paying attention. I hope you're watching these markets for yourselves. There is something called intermarket analysis, and what the bonds are doing compared to what the dollar is doing, compared to what the S&P is doing, compared to what the other markets are doing. They are all interrelated, and they all move based upon what the others are doing. With that in mind, we have reason to be short S&P for Wednesday into Thursday morning, but we have reason to think once you get past the morning, you may want to get out of this market. Whatever bonds do will likely determine whether or not we want to go short again S&P or if it finally finds its legs. For now, I tell you this, start the day off with a short in the S&P, but do not fall in love with the downside. So traders, you've seen the charts, and there is my technical argument for why we have the red omni to start the day off. But just be careful that it doesn't end up going like this before the day is over. We will not fall in love with the downside, and there are many reasons, as you've seen, between bonds and the Dow Jones Industrial Average. And if you look at the tranny, there's another reason why technically in the tranny we want to be short early, get out of the shorts, and sidestep the action, because I think this market starts to gain its legs. Again, on record stating, we start off short. We're not hedging. This arrow pointing down is how we begin our day. But we do expect at some point you can very easily find some buyers and finish this week off on the upside. Let's take it 1 hour at a time. Traders, I hope you like the analysis that is being brought to you in these videos. Remember, there's another 928 other videos, a lot like this. Come on down to livewithoscar.com. Come into my free trading rooms where I can help you become a better analyst. Take a look at my 928 other videos. Join me in my live classes when I hold them and become a better analyst. That in turn hopefully will make you a much better trader. Remember, that is at livewithoscar.com. All right, traders, I'm going to get out of here now. I want to go back down into my trading office and see where these markets are. Always keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll. Do not fall in love with the downside. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.